The internet, or maybe even your accountant, says an S Corp will save you money. But what if they're wrong? In today's video, we're going to dive into one of the most misunderstood areas of business finance, which is selecting an entity type and specifically moving from a sole proprietor or LLC to being taxed as an S corporation. I'll show you why your accountant might be wrong, the financial implications you might not be aware of, and the real way you should go about choosing the best tax entity type for your business. So if you've ever questioned your business structure or you're wondering if you're leaving money on the table, make sure to stay to the end of this video because I'm going to tell you more about why your accountant might be leading you in the wrong direction. Hi everyone, I'm Jamie Trull, your favorite CPA and financial literacy coach, and today we're going to talk about one of my favorite topics, which is S corporations. Now, I know I sounded a little bit negative in that intro, but that's because I'm so tired of hearing about people who should never have been S corporations to begin with, coming to me with questions. And I am often just left wondering who in the world told them that was a good idea for them. Now, I am not anti-S corporation. In fact, my primary business is an S corporation, but it wasn't always. And it took a little while to get to the point where that made sense for me. So we're going to talk about where that could be and how you know if your accountant is actually doing the calculation the right way. Now, one thing to always talk about here is that an S corporation is just a tax election. It isn't really its own legal entity type. So typically you're going to be, say, an LLC. If you have an LLC, right, which you do need to have either an LLC or a C corporation in order to elect to be taxed as an S corporation. But if you're a small business, then maybe you have an LLC already, and then you're going to make the election to be taxed as an S corporation. So you're still an LLC from a legal perspective. That's where your legal protection comes from, but then you are being taxed like an S corporation rather than the default for an LLC, which the default tax for an LLC is to be taxed as a sole proprietor. That's where you file that Schedule C with your taxes. I'm not going to get into all of that, but I have tons of videos on this topic if you want to go deeper into the differences between an S corporation and an LLC or a sole proprietor. So why do accountants love S corporations? Well, it's a great way to help people save money, or at least give the appearance of helping people save money. And the reason that I say give the appearance is not because I think that accountants are out there to give you the wrong advice, but I do think that there is a reason that it can make sense for an accountant. For example, if they recommend you become an S Corp, guess what? You now have additional requirements, many of which would require you to pay them additional money in order to maintain that S corporation. So for example, you will have a payroll requirement. Well, they can handle that for you and charge you for it. You will have an additional tax filing that is an 1120S. They will do that and they will charge you for it, right? There are more things that you need to keep in mind as an S corporation that may require consultations and consistent advice from accountants. You now have to worry about things like basis when you're taking money out of your business, right? So there are just additional complexities that come along with it. So from an accountant's perspective, if somebody moves from an LLC to an S corporation, that's some dollar signs towards them as well. Again, not that they would give you bad advice because of that, but you want to make sure that when that calculation is happening, that the additional compliance costs are also being factored in. You need to add that when your accountant is telling you, hey, this is going to save you $10,000. You can ask, well, what's it going to save me after considering all the additional costs that I am going to have to be an S corporation? So does an S Corp always save you money? I mean, you can probably guess at this point, no, it doesn't. And I swear, I have gotten so many questions from people who are already S corporations, and they've come to me to help with a reasonable compensation study, which is something that I offer. And in the midst of that, it will come up with what their reasonable compensation, i.e. what salary they should be paying themselves. And they tell me, hey, I'm not profitable, or I can't pay that salary. I don't have enough profits in order to do that. Do I have to pay myself that full salary? And that to me is a trigger that they are probably not the right entity type. There is no benefit to being an S corporation if you don't have enough profit to both pay your reasonable salary and pay distributions to yourself above and beyond the reasonable salary. And the reason for that is that the reason S Corp makes money in the first place is that your salary is essentially paid first, and that's going to have all the taxes that you're used to paying, income taxes, self-employment taxes. Above and beyond that, if you have profit above and beyond that, so let's say you pay yourself a reasonable salary of $50,000 and your full business profit is $100,000. Well, $50,000 is going to have all the taxes, and then the other $50,000 is only going to have income taxes. There are no self-employment, i.e. payroll taxes. Those are things like Social Security and Medicare on that portion. But if you can't pay yourself that full salary, there's nothing above and beyond to get a benefit on. So now you're paying for additional compliance like payroll and an 1120S filing, and you're going to have to follow more rules that you need to be aware of, and you're not getting any tax benefit from it. And I always scratch my head in these instances because somebody gave you that advice, right? And most of the time when I ask, hey, why did you decide to become an S corporation? It's because their accountant told them it would save them money, and it is not. And you can tell that I get really worked up about this because I hate bad advice from people that you're supposed to trust. So I want to tell you how to know whether or not you're getting good advice from your accountant. And I also have a masterclass coming up that's going to go more into detail about potentially becoming an S Corp so that you can make an unbiased decision for yourself. So if you're interested in diving deeper, definitely go to jamietrull.com/switch. It's a free masterclass, but definitely come and show up because we're going to be able to dive even more into it and give you some resources in order to kind of check for yourself and not have to blindly trust somebody else's recommendation. Now, if you are working with an accountant, how do you know if you're getting the right advice? If your accountant doesn't have all of your financial information, if they are not asking for, say, your spouse's income, right? If they don't want to know all your different sources of income, if they don't want to understand anything else that's going on in your personal life that could affect your taxes, they're not doing a full calculation. If they're not asking you about how much you want to be putting into retirement and what types of retirement accounts you have, right? If they're not asking you whether or not you plan to hire your children, those are all considerations in this decision. And so your accountant should be asking you lots of questions. If the only question that your accountant is asking you is how much is your profit, right? And they're doing a back of the envelope calculation based on that profit amount, they are not doing it right. And if they are just giving you a blanket recommendation because you say, well, I make $70,000 in profit, and then they say, well, you should be an S Corp, that is old advice. That has not been updated. In 2018, the Tax Cuts and Jobs Act was passed, and it changed a lot of things when it comes to the calculation of S Corp versus LLC. And one of those things that really put a wrench into that entire calculation is the qualified business income deduction. And that makes the calculation way more complicated, and it means you have to have way more pieces of inputs in order to do it correctly. So what I realized is that for me, when I was doing this calculation, it was significantly different than what I had heard. I had always heard, okay, if you make more than 50,000, 60,000, maybe 70,000, then you should be an S corporation. It'll save you money. But it totally depends. And for me, when I did that calculation, it was north of 150,000 before it made sense for me. Now, that's not going to be true for everyone, right? That is going to change depending on your specific situation. And there are lots of variables to be included, but that's my point, right? If they're not even asking, they're not doing the full calculation, and it can be off by tens of thousands of dollars. And my other gripe is that oftentimes people that I'm working with on this, right, were told by an accountant to be an S corporation, but they were never explained what that meant. What did it mean that they were supposed to do? What changes when you're an S corporation, right? There are specific ways that you're supposed to reimburse yourself. You're supposed to have something called an accountable plan in order to make sure that reimbursements of your costs that you personally have for your business, let's say your cell phone, for instance, if you want a portion of that to be able to be deducted, you have to do that a certain way as an S corporation. If you want to hire your minor kids, that's something that I talk about a lot on this channel, right? There are more steps. You may have to set up another company that is not an S Corp in order for you to get the tax benefits and to be able to hire them. So it gets more complicated. It's not just about that calculation. So what you don't want is an accountant to just say, yes, be an S Corp, help you become one, and then send you on your merry way without realizing that there is a lot that can go wrong if you don't know what the requirements are. And if they are not proactively helping you with that, then that's going to be a problem. And that's when this can come back to bite you. I know people who became S corporations and never paid themselves a reasonable salary because no one ever told them that they were supposed to, then got audited by the IRS, and you can guess what happened next. And unfortunately, nobody told me is not a defense for the IRS, because ultimately you're the one responsible for your business at the end of the day. So if you are thinking about becoming an S corporation, I really want you to come to my S Corp Switch Masterclass. We are going to go even more in depth in this, and I'm going to show you how you can determine whether or not this is a good fit specifically for you, so you can make an informed decision, and also tell you how to stay compliant as an S corporation and give you the tools that you need in order to do that. And if you're watching this because you already elected S Corp and this video just happened to, cross your path, then definitely come to the masterclass as well. There's probably a lot that you can get out of it too. Again, many S Corp owners don't realize what the rules really are, and they don't realize that they might be doing something incorrectly just because nobody told them what they were supposed to do. So to recap, S Corp can save the right businesses money. It can be a great tax strategy if you're the right fit for it, and if you know what you're supposed to do to stay compliant. The key is to understand your needs and to not get wrapped up in generic advice that is not specialized to you. So if you're in that place where you're trying to decide if S Corp is right for you this year and if you're going to elect it, jamietrull.com/switch, come to the masterclass, ask your questions. It's going to be a great event, and I hope to see you there. If you want to learn more about, say, reasonable compensation, check out the video that is currently on the screen where we go more into the requirements for reasonable comp. As always, thanks for joining me, everyone. Make sure to like and subscribe, and I'll see you next time.